Hey, Dennis Tubergen here with a second video blog update this week. You know, we've talked in the past on these video blog updates, and I've talked about it on my radio program, the Everything Financial radio program, the idea that asset bubbles exist when easy money policies are followed. See, easy money policies lead to bankers making credit available on a widespread basis, and asset bubbles require easy credit to be fueled. You cannot have an asset bubble unless it's fueled by easy credit. The housing crisis that we saw about a decade ago here in the United States is an example of that. Prior to that housing bubble building and then subsequently busting, there were some crazy loans being made by bankers. There were negative amortization schedules. There were zero money down loans that were made. There were loans that were made for mortgages with no credit checks. You just had to show that you have a paycheck stub. Well, there is another housing bubble building, and I believe it's very close to bursting, and that is the Vancouver, British Columbia housing bubble up in Canada. Just take a look at these numbers. This is from a Bloomberg article this past week. The cost of a single-family home surged 39% over the last year. The average single-family home in Vancouver now is 1.6 million Canadian dollars. More than 90% of these homes are now worth more than $1 million, and that's up from 65% a year ago. If you were to chart these price values on a price chart, the shape of the price chart would be parabolic. And whenever you see a parabolic price chart on the way up, you almost always see it bust on the way down. I think we're going to see a Canadian housing bubble collapse, and I think that the U.S. housing market won't be far behind. I believe now is a good time to think about selling your real estate, keeping the cash, and buying some more real estate down the road. That's my second update this week.